And so leverage what you know. Use a repeatable process plus execute your trade using automation. That was what I've made. And here's how the basic controls work. You download Fill Finder. You have resistance zones. And so whether you're trading at your desk every minute of the day, and as you watch a market move, you think, oh, I think it might pull back to XYZ place, you know, between 8 and 10, let's say. You'd type in 8 at the zone low, 10 at the zone high, and click Activate Resistance. And then, and it's laid out a little differently, but then you'd go over to the Trade Quantity Control and simply fill in quantity 1 and quantity 2, how many contracts you want it to execute. And the difference between quantity 1 and quantity 2 is simply the profit objective used. That's it. All entry criteria, everything else is identical. It's simply, in a nutshell, a smaller target and a larger target. And then below that, you have the ability to individually close or close all of your position at any time, simply clicking one of those buttons. And then the same for trading at support. Market's pulling back a little bit into a zone that matters to you. And you can simply type in the zone high price is 11, the zone low price is 9.2. If it trades between 11, 9.2, or even goes below 9.2, Fill Finder will in real time read and detect order flow events that indicate, based on order flow, based on actual real-time trades and what's available right now, and will execute a trade based on when the timing seems highly favorable for the market to at least bounce in your favor and at least reach your smaller profit objective. It also simultaneously, when you're filled, puts in a risk, a stop loss. The stop loss, though, is custom tailored to each trade. And so if the ticks that span, the tick span that your opportunity might be associated with, it might be 11 ticks, well then your stop would be just beyond that 11 tick scenario. But then later on in the same market, in the same day, there might be a new scenario, and that one might span only 5 ticks. Well, your stop is dynamically sized to each individual trade scenario that triggers an entry. Same with your profit objectives. Those are not fixed. Those are dynamically sized in accord with each trade scenario. And the idea with regard to managing risk, you know, I've worked with a ton of traders. And so often the focus when it comes to managing risk is, where do I put my stop? Where do I move my stop? And so rarely is it the first idea. It's a great idea, but it's rarely the first idea. And I, myself included, when I started out, I was not thinking in terms of how soon can I take my profit. I was always looking for the bigger move, always thinking, well, if I only make $65 per contract on this trade, how am I ever going to, you know, how's that ever going to add up? Is what I used to think. Now I realize it can, and it does. And so by having a smaller target fixed to the opportunity itself, it gives you a chance to make money and rebalance your risk. And in most cases, the risk can be taken out of the equation in terms of where your stop is and what money you've already made off of your quantity 1 contract. So you can just do it. You don't have to have anything in quantity 2 or anything in quantity 1. You can do it all lopsided if you want. You can control whether or not the stop goes to your entry once quantity 1 is filled. It doesn't have to. It can stay where it began. And there's other flexibility, other items that I've built into it.